When selecting a bank that offers reliability, convenience, and a wide array of services, two top contenders stand out as the second and third largest banks in the United States by assets. They boast extensive branch networks, robust mobile apps, and a rich history spanning over a century. An overview of these banks reveals that one has 4,800 branches and 12,000 ATMs nationwide, while the other has 4,000 branches and 16,000 ATMs across the country. The first bank has 800 more branches, but the second bank has 4,000 more ATMs. In terms of account offerings, both banks provide various checking and savings accounts, home mortgages, auto loans, credit cards, CDs, and investment options. A comparison of the two banks reveals that the first bank has more branches and lower monthly fees, as well as personal loans and lines of credit that the second bank does not offer. However, the first bank has fewer ATMs, limited ways to avoid monthly fees, and low saving interests. The second bank, on the other hand, has a larger ATM network and waives monthly fees with direct deposits of at least $250. It also offers higher interest rates on saving accounts and a wider range of CDs, giving it an advantage in terms of saving accounts. However, the second bank has fewer branches, higher monthly fees, and higher no-fee balance requirements. A closer look at checking accounts reveals that the first bank's everyday checking account has an initial deposit of $25 and a $500 minimum balance to avoid fees, with an $8 monthly fee. In contrast, the second bank's Advantage Plus Banking has an initial deposit of $100, $12 in monthly service fees, and a $1,500 minimum balance to avoid fees. The first bank has the advantage in terms of checking accounts. When it comes to savings accounts, the first bank's Way to Save savings account has a 0.01% APY with a $25 minimum opening balance, a $5 monthly fee, and a $300 minimum balance to avoid fees. The second bank's Advantage Savings account also has a 0.01% APY, but with a $100 minimum opening balance, an $8 monthly fee, and a $500 minimum balance to avoid fees. The pros and cons of each bank are clear. The first bank has more branches, lower fees, and lower balance requirements, but fewer ATMs and weaker interest rates. The second bank has more ATMs, more options to avoid fees, higher saving rates with larger balances, but fewer branches, higher fees, and higher balance requirements. Ultimately, the choice between these two banks depends on individual preferences and needs, with factors like branch accessibility, fees, interest rates, and additional services playing a crucial role in determining the best fit for financial goals. While both banks offer robust banking services, a comparison of their checking and savings accounts suggests that the first bank may have a slight advantage.